Kingsley, welcome.
Thank you. Thank you, sir.
No, no, 10, 9, 10, I'll start. Let me set up something.
All right, sir.
Good evening, everyone. So, without further ado, this is 9:09. So, I'm starting. So, yesterday we talked about what do we take? Yeah, yesterday we talked about difference between trading and investment. Now, today we are going to talk about the arguments on FA and TA. Then we'll talk about basic support and resistance. Then preparing your mind for the journey ahead. Alright, the friendly chat with DF Basy. Then tomorrow we'll finalize and we're done. Tomorrow we'll talk about navigating through MT5, C trader, mass trader, lock trader, and mostly it will just be MT5 and C trader. Then we'll also talk about introduction to bullish and bearish market using trend line. So once that, we are done with the free beginners course, right? So going to today's deal, the argument on FA and TA, the argument on FA and TA, right? So remember, I told you guys what FA is. FA is simply fundamental analysis, while TA is technical analysis. Um I explain TA is doing the analysis on the chart, then fundamental analysis is doing analysis based off on the economic events happening in the country of which the currency is in use. The currency that you're trading, which country uses that currency, what are the economic events, what's the economy like, what's happening, what have they been doing, what is it improving, what changes have the current administration done to improve the economy, or what bad decisions have they taken that will affect the economy negatively. And that you as a trader is getting those piece of information and trying to capitalize on it, speculating the price movement, the exchange ratio of that currency pair against another. That's fundamental analysis. Then TA is doing your analysis, technical analysis on the chart. Um, yes. Well, I first lost for the day. But TA is just doing your analysis. TA is doing your analysis on the chart here, on this chart, right? Doing all this, what I did here is simply TA, technical analysis. Okay, so moving forward, whether you're investing in whether you're investing or trading the forex market, this study material will explain what fundamental and technical analysis are. The contentious debate among traders and investors over what analysis technique is better has been going on for quite some time. On the on one hand, fundamental analysis has proven to work especially for seasoned investors such as Warren Buffett and Ralph Sager, right? On the other hand, technical analysis has its own merits. In several markets, in several markets around the world, traders have made millions with the help of technical analysis. The reality, however, is that combination of both produces the best results, especially when trading in the crypto space, forex space, where nothing is easily predictable, right? Here is an in-depth look of technical Here's an in-depth look of both techniques with comparison that will help you make an educated choice. What is fundamental analysis? Investing in trading is oh god, someone is calling me. Sorry, please hold on. Okay. So investing in trading is in any market is all about evaluating the value of an asset to determine whether the asset is worthwhile either in the short or long term. Fundamental analysis is a process of measuring the value of an asset based on related economic or financial factors, right? In the case of the forex market, fundamental analysts would consider the currency pair's intrinsic value by looking at that currency pair's economic strength, government leadership, roadmap, and the overall economic trends that are bound to affect the base of and quote pair, and an overall look at the country's use case. The type of analysis this type of analysis is normally considered ideal for long-term investors. At its core, fundamental analysis measures the intrinsic value of an asset or the strength of pairs by evaluating all the tangible and intangible prospects of decisions made by the government of the currency pair in use or investment using available information. The aim is to best determine whether the asset is undervalued or overvalued, right? So that's fundamental analysis. It's in-depth um, analyzing the measuring the value of an asset based on the related economic or financial factors, right? So the asset or the currency pair or the crypto, whatever, you're evaluating based on the financial and economic factors. While technical analysis, what is technical analysis? Technical analysis, on the other hand, is a trading technique that evaluates the value of an asset based on statistics and trends of that asset's price movement and trading volume combined with trading tools and patterns. Let me go again. So now, hold on, you guys should please excuse me. All right, sorry. So back to what I was saying. So technical analysis, on the other hand, is a trading technique that evaluates the value of an asset based on statistics, right? Yeah, evaluates the value of an asset based off on statistics. So these statistics, right? Remember I told you guys on the candlestick chart, the each candlestick represents volumes, represents transactions, represents buying and selling, the transactions that occurred in the market at a certain time, depending on the time frame which you are on. So there's a 15 minutes time. I'll show you guys that tomorrow. Now, let me show you guys already now at once. So now there's in on the chart there are different time frames. There's the 30 minutes, there's the 15 minutes, there's the 5 minutes, there's the monthly time frame, there's the weekly time frame, there's the daily, there's the 4 hour, there's the 1 hour. So what does this show? All this entails that in on this candlestick, even on the 1 hour time frame, shows that every candle, every candle here opens and closes every hour, every 1 hour, every hour, every candle forms and closes. So it's telling that each transaction, each information, each buying and selling, everything that has occurred within that hour is interpreted and printed out on this candle, on each candle. So being able to read each candle will tell you the details, or reading all of them combined together will tell you will give you an information of what happened to the market, the transactions that went by, what whether the buyers and sellers were struggling price or the buyers took over the market and or whatsoever. All right. So technical analysis is built on the belief that past price movements and market activities of a given asset or pair can be used as a valuable source of information to determine the future price trajectory of that asset pair. While a fundamental analysis focuses on the asset's intrinsic value and measures the asset's capacity to increase earnings, a technical analyst will only look at the price history and the trading volume of the assets, right? That's what I just finished explaining. That is simply looking at each chart, each time frame, the informations, each candles, what the form, what information are they telling you, what information are they passing out to you, right? So technical analysis use math equations, charts, and graph to determine the trends and patterns that support either a buy or sell signal. Since the underlying business is not a consideration, the technical analysis will measure this signal in comparison with other technical indicators that support a similar narrative. While fundamental analysis encourages the investor to search out an asset per inherent value, technical analysis is concerned with methods that forecast the price action of the asset stroke pair. Alright, so pros and cons of fundamental analysis. Analysis based on a project's financial and competitive position has several advantages. Analyzing the environment in which it operates is also of value. Focusing on the use case, white paper or roadmap rather than the asset price gives investors an idea of what the company is actually worth. This is invaluable for long-term investing. Investing during market bubbles can be rewarding, but it's still important to know when the market is in a bubble as to manage risk accordingly, right? The biggest profits are usually made by the investors that are correct when the rest of the market is wrong. This can only be achieved when fundamental analysis also this can only be achieved with fundamental analysis. Also, decisions based on fundamental analysis typically have a higher probability of being correct, particularly over the long term. That's why I said the hedge funds, the traders, even traders, they go to buying, taking positions in the long term. So they mostly use fundamental analysis for their analysis. They use a little touch of technical analysis, but they use fundamental analysis and they're always taking, if they're using a little touch of TE, they're analyzing from the 1 week daily time frame, 4 hours at most, daily time frame, 1 week, 1 month, and thereabouts, right? So there are also several drawbacks to fundamental analysis. It's important to be realistic about its limitation. Fundamental analysis is time consuming. Each project must be studied independently and in detail. Most of the information used in fundamental analysis is widely available. To gain an edge with fundamental analysis, you need to find unique data assets that aren't available to most investors, which in most cases I think it's really except you're using chart prints, footprint charts, order flow, and there's these other tools people use now. That's when you can also, and it's more those tools are not like only not like fundamental analysis tools. They're more like a TA tool, but you can also use them as fundamental analysis, right? Fundamental analysis tells you very little about what might happen in the short term. Short-term price movements and volatility cannot be forecasted by financial statements. That's what I was telling you. The hedge funds look at fundamental analysis because they're analyzing for a long term. You cannot use fundamental analysis to analyze for a short term. You use TA to analyze for a short term price movements, right? So for fundamental analysis, you can use fundamental analysis to know the long run, the overall trend of the market, while going down to using your TA to analyze in depthly what the market is about, right? So pros and cons of TA. One major advantage of technical analysis is that an asset can be analyzed quickly. Also, some tasks can be automated, which saves time. This means a technical analyst can cover more assets and draw ideas from a larger universe. Technical analysis can also be used to identify price targets and levels an idea at which an idea is obviously. Hello, sorry, network trip. Simon, sorry, Simon. I don't know how to pronounce that name, but sorry, network.
Okay, sir.
All right, so going back.
Okay, sir. Nice.
All right.
Fine, sir.
So one major advantage of technical analysis is one major advantage of technical analysis is that an asset can be analyzed quickly. Also, some tasks can be automated, which saves time. This means technical analysis can cover more assets and draw ideas from larger universe. Technical analysis can also be used to identify price targets and the levels at which an idea is obviously wrong. This allows traders to create a investment stroke trading strategy, right? In the short term, price action is affected by several factors that fundamental analysis cannot pick up. The effect of the market sentiment, market psychology, and supply and demand can all be observed by looking at a chart. Technical analysis can be used to improve timing and to trade strategies appropriate to market conditions. It can improve hedging and DCA strategies by improving your timing when shorting or selling or buying options. By looking at the chart, you can quickly see whether a stock price is trading range or a trend, right? Using fundamental analysis and technical analysis together. So all this here is a brief explanation. The detailed explanation of what I've already said earlier on. When you're combining FA and TA together, you have higher chance of getting precise entry. You have a simple way of looking at the chart will give you an idea of the direction of the market trend. You can build a watch list of the currency pairs you are prepared to own, to buy or sell, and you can use fundamental analysis to check if the direction is trajectory to your technical analysis, right? Technical analysis can also be used to find favorable entries and levels for assets, outtrend and project and all that. So combining two of them can give you a fair value and a fair price to which you can make money in the market. Can give you good and how will I put it? Good and straightforward analysis, price speculations, right? Against each currency pair, currency pair against another pair against another. So some pairs can continue trading higher for a long time and become overvalued. Selling an asset just because it's expensive often means missing out on larger percentage of the value. Using and price action and trends, you can continue to hold an asset until momentum is exhausted. So TA helps you to valuably understand how and where prices will get to before reacting. All right. So you can remember your brain gets stronger every day because you exercise it. The stronger you get, the more money you can make. Right. So let's go to basic support and resistance. Basic support and resistance. So mind you, support and resistance level is the same thing as saying demand and supply. Resistance is the supply and support is the demand zone, right? So this is typical example of support, resistance and support zone. Let me go to the chart and show you. Hmm, this market is in an uptrend, but doesn't have any steady. Let me look at this guy. Looking for where it all
I'm
aligns.
not
Can
seeing
you
your
hear me?
screen more.
Not see my screen. Can you see my screen now? Can you see my screen? Can you see my screen?
Yes, I can hear you.
Can you see my screen? Can you see my screen? Can you see my screen? I'm asking if you can hear me. I'm asking if you can see my screen. Okay. So I'm talking about support and resistance. So you can take here to be our support, and you can take here to be our resistance. Now, why is this our support and why is this our resistance? This is support because you can take this as either your support or you call it your demand zone. It's still the same thing. Why? Because market touched this place severally. Market respected this zone severally. Market respected this zone severally, right? Then over here as your resistance or supply zone, market, you can see coming to that range, market respected it severally, several touches before selling down. You can see what price did. Price movements came, tapped, respected it, came down, tapped again, respected it, came down here, tapped, respected it, tapped, respected, came back down, tapped and respected and came back down. All right. So technically, a support is the same as a resistance zone. Support is same as a demand zone, while a resistance same as a supply zone, right? They both play the same. The two are just interchanged but different names. Support where price holding at a demand zone, while resistance is the same thing as price holding at a supply zone. So people, you buy at the support, you sell at the resistance. Buy at the support, sell at the resistance. Buy at the demand, you sell at the supply. Right? All right. So support and resistance. Support and resistance is a fundamental concept of technical analysis used to identify key price levels where an asset price tends to pause, reverse, break through these levels and reflect interactions of supply and demand in the market to help traders make informed decisions, right? So support is a price level of where a downtrend is expected to pause and reverse due to increased buying interest. It acts as a floor where demand is strong enough to prevent further price declines. Right? Characteristics of support level. Buyers step in at a support level, absorbing sellers' pressure. Right? Support often forms a previous low as areas where the price has historically bounced back. It can be horizontal, a specific level, or dynamic, or rising trend line or moving average, right? For something like this is a support zone, clear support zone. Market came back, tap. Once it taps, you can buy. Came back again, tap, you can buy. Came back again, tap. Respected that zone severally. You have to respect the zone twice to make a support zone, two times. Then the third touch on the support zone is a valid entry. Then talking about resistance level is the inverse of support. So it's a level where market comes to a peak and sellers take over the market from the buyers. Resistance is a price level where an uptrend is expected to pause or reverse due to increased selling pressure. It acts as a ceiling where supply overwhelms demand. Alright, sellers enter the market at resistance, halting price increases. Resistance often forms as previous high or areas where the price has struggled to break through. Like support, it can be horizontal or dynamic, right? So something like this is a resistance zone. I give you guys an example. This is the resistance zone. You look at market can't touch this place. Candle stands 1, 2, 3, 4. Touch the place. Candle stand, right? So role of the support zone it serves as key points to take note of. The half support and resistance zone serves as a reversal point. Their strong levels, depending on the time frame, they may vary, right? And the psychological levels may vary too, depending on the time frame. On the time frame, the place they can see it on 30 minutes time frame, the place you're calling a support can be liquidity on the 4 hour time frame. So that's why you need to learn how to do top-down analysis, which is on the intermediate course. So visual identification, you can identify the support and resistance of the supply zone or demand zone on charts, or you can use tools and you can use breakouts and breakdowns, right? So this is a clear example of support and resistance with your trend line. Draw here, this is like a channel and this is like an uptrend. Market respecting this point, market respecting this point. If you see when market comes close to the line, it reacts, either it sells or it buys, it sells, it buys, it sells, it buys. So limitation, support and resistance are not guaranteed to hold. They are areas of interest, not absolute barriers. So they are areas of interest, which means once market comes to this point, you shouldn't be expecting to go all in. You should be waiting for confirmations, right? You should be waiting for confirmations whether I should buy, whether I should buy. You should use other conferences. That's when you're after doing your TA, your FA comes in fundamental analysis. You do analysis on the economy of the currency you're trading at that point. False breakouts or breakdowns can occur, leading to traps. So, example of false breakouts like this, you look at this trend line. You look at this trend line, this support zone is where the markets look like don't break the trend line, or so, it was broken, like it has broken the trend line. It wants to continue going down, but it didn't. It still reversed and followed the channel, right? So those are like false breakouts. Then external factors like news, market sentiment can override the technical levels. So the fundamentals like news, or like something that happened today where Trump just wake up for this morning, just enter call press and just gave out news, and the next the market went sideways. Things like that. I don't know. This guy is just Trump is just scattering the market. Though he's trying to rearrange the market, but this is not how you should be doing it. Fighting with everybody doesn't make it insane. So he just came out and gave a speech. Normally, if the president should be giving speeches, it's not supposed to be affecting the market this way, and he shouldn't be making threats. But when you come out as a president and you're threatening other countries, other economies, it has a way of deflecting investors, which in turn also affects the market. So as a trader, by understanding and applying support and resistance, you can better anticipate and speculate price movement, manage risks, and develop effective trading strategies. So my brain gets stronger, your brain gets stronger every day because you exercise it. The stronger it gets, the more money you and I can make. All right, so we are done with support and resistance. So now we're preparing your mind, a friendly chat. So I don't know who is with me active. Okay, Simon, you can unmute yourself and talk.
I'm with you.
Yeah.
I'm
So
with you, sir.
a friendly interaction with you. How are you doing?
I'm good, sir.
Okay, so so far so good. How do you see trading, forex trading as?
It's getting more interesting every day, sir.
Okay, that's good to hear. So forex trading, right? It's something you
Hmm?
can leverage on. Some it is forex trading is a skill, something that most people don't really know. Everybody, if there are many people that come into the industry, but they don't really succeed in it because they take it as a side hustle. It's not a side hustle. It's a skill, it's a profession. There are people that are committed and devoted to it. There are people that their job is to trade. They wake up every morning. What they do is the first thing is they are on their screen, they are trading till evening, you get, and they manage funds for people. So trading
Yes,
itself is a career. Right. So now you don't expect the journey to be easy. Same
yes,
as when you go to you go to school to study for a course for 5 years, 4 years, studying law, you study engineering. It's the same way you study the market, the forex market. Study yourself. Remember, I said that once you're trading, everything your emotions, your attitudes, your character bleed into the charts. Once you're trading, if you're a greedy person, it will show. If you're a stingy person, it will show. If you're someone that has compassion, it will show when you're trading. If you're someone that's always scared, it will show when you're trading. The market unravels you and helps build you. So the market helps build you in the sense that it helps you to be more patient, right? You tend to wait for more opportunities than you've noticed. Traders are successful traders are very patient. Very they have patience. They can overlook a lot, waiting for the perfect timing to attack, right? So now, the first mark, what I advise you to do is you need to calm down and learn well. Work on yourself. Most people after the
yes,
beginners
sir.
class, they'll be asking me. So there are some they'll be asking me they want to deposit how much to deposit and start trading. I advise you don't deposit money yet though. You will trade on a demo account. A demo account is a stimulated account that gives you the same experience and the same feel as a live account, but it's not real money. So you practice that for at least a year before even thinking about depositing on a live account. If you're depositing on a live account, you should be depositing with guardians, someone that's trading or giving you signals, analysis. Do you get me? So far as you are serious and you are dedicated and you're consistent, there's this thing
Yes,
that
sir.
fraudsters will say. They'll say consistency. And consistency they pay. Yes, consistency pays, but if you're consistent doing rubbish, you reap rubbish. If you're consistent doing the right thing, you reap the right thing. So it all goes both ways. And you need information. What you need is access to information. Some of the things that I got to know at some years while trading are something that I should have learned since before. But since I didn't get those information, I couldn't get access to those information. I learned them late. So I'll advise you guys to get at information, access to information, important information, and build yourself. Try to learn more. Outside what I've showed you, try to read more. Try to YouTube. Everything you want to find, yeah, on YouTube. Plenty. It's just that like what I have on my advanced and intermediate. Sure, you can see some of the things I have on my intermediate on YouTube, but most of the things I have on my advanced, they will not want to show you. Do you know that there's this thing? There's what you know what on YouTube they give content. It's called content. They give you the things that can be available, but the important things like let's say trading liquidity, most people won't show you exactly how to trade liquidity. But you also see some people on their YouTube video, they'll all be talking, they say trade to do this, that, analyze from here to there. They don't give you specifics until you have to tell them until you join their classes or something. But you can get basic knowledge from some of those videos. So try to get to know more. Search, right? Do your own research. DYOUR. Do your own research. Gain basic knowledge. It's not a get rich quick scheme. It's not something that you join and the next 3 months you're withdrawing your 20K dollars and 10K dollars. Something is a process. The learning curve. Once you're done with the learning, it has phases. So once you're done with your learning curve, you build your psychology levels. Once you're done with that, you build your personality. Once you build your personality, you build your plan and your trading edge, right? There and then after then comes the success. So is there any question you would love to ask? Any questions, any issues you're having or
No, sir, I'm okay for now.
you're okay? No, hello. Wahala. So with that, I would love to end the class. So I don't know. I've not added yesterday's onto the drive because I'm busy, sure. So let's say either tomorrow or next, I'll add to this on yesterday's class to the drive so that you can go back and watch it whenever. All right. All right. Good night and see you tomorrow.